All right, there we go. We are now recording. So thanks everybody for joining me tonight. This started to do, we thought about doing a webinar last week. We did a nice review of markets in the trading room last week. I think it was Friday. We talked about our sectors breaking down a little bit, or were there some cracks in the sectors and in the major indices, and we went through one by one. We went through a bunch of sectors and we spent about 45 minutes, and I just said, you know what, let's do a full webinar about this subject, and we'll kind of go over, especially when you try to do it during the trading hours. You always get distracted with something. You always get distracted by a trade, and it kind of takes your focus off what you want to talk about. So I think it's more suitable to talk about this after hours, especially, today would have been ridiculous to try to do a webinar like this during the day because the action was pretty fierce today. So I think it's definitely a good time to kind of take a step back, and we'll go through some of the charts, especially after today. We just haven't seen volatility and like this so long. There's so many different points to kind of make about today's sell-off, but the first one that comes into mind. By the way, this is the new logo. So you're going to see this more. New logo for Tribeca Trade Group. So that'll be you'll start to see that more and more as especially if you're members of the group. So I wanted to unveil that tonight. But the first thing that comes to mind when you have volatility like you did today in the market is we just haven't had it in so long. I mean, I've been trading for a long time. I've been trading since what, I think it's 1998. 1998 was when I started trading, and there's always been market volatility over the years, and we've really gotten conditioned over the last couple months. We just haven't seen it, and more or less, there's been a lot of days where we don't do anything. We just kind of chop around, and if there is a little bit of a dip, it gets bought so quickly, and we've kind of gotten the muscle memory recently of like every little dip gets bought, which is not necessarily very healthy, because sooner or later we are going to get a correction, right? We just haven't had that 3 to 5% correction. We've had these little mini dips, and they get bought like literally in a day later. So we're going to talk a little bit about that tonight, and we're going to talk about as well, which I think is very timely, when you want to kind of get back into the market a little bit. Some indicators that you could look at to tell you things are going to reverse a little bit. It's tough to talk about. Talked about this a couple of times in the trading room today, but it's tough to be completely objective and to not talk about politics, because obviously it's surrounding us, and you've got a lot of anger out there. All you have to do is basically open up your Twitter, and you could see on any given day people are really passionate about what's going on. So there's it's going to be over us for what, at least till next week, it seems like, until there's going to be some type of clarity. So all right, so I'm going to get into all that in a minute. Let me go ahead and do the usual thing. Risk disclaimer for tonight. Basically, go ahead and read this on at your own. But basically, everything that you hear tonight through this presentation, through tonight's webinar, is basically for information purposes only. I'm not recommending anything like that. So just everything is for information only. So I have to make sure that I say that at all times. My background, again, I'm not going to go through my background. I think most of you know me, but my style of trading is a macroeconomic style. I look at all the markets. I'm always looking. That I think really gives me an edge, because my background of ETF trading, why I love ETFs so much and why I talk about them so much, is because it allows the retail investor and the institutional investor to go ahead and get into every nook and cranny of the market. So if there's a trend going on somewhere around the globe, it's much different than it used to be when I started trading, back in the early 2000s. You just couldn't get into these markets as a retail investor, and it's just has improved trading efficiency so much, and to be able to get into any of these markets, in and out of them, whether it's emerging markets, whether it's European markets, whether it's Asia markets. I mean, you couldn't do that ever before. So it really kind of also gives you a good indication, even if you're not trading these markets, about what what the whole pulse of the globe is doing. And I've talked about international markets just over and over and over. I talk about them on Twitter at least a couple days. So I'm going to go into those. We're going to talk about what's moving in that area. So most of what I'm going to do tonight, I think I have like a half a page of PowerPoint. I'm not a PowerPoint person. Traders don't do PowerPoint presentations. If anybody, if any traders has a really good PowerPoint presentation, you would probably need to wonder about them, because it's just not something that we're going to. The traders are normally good at. So we're gonna go through a lot of charts tonight. So good evening. So markets got smoked today. So now what? It's one day. You know, I don't like how we finished today. We basically closed on the lows. We were kind of looking in the last hour of the day to see if the markets were going to kind of come to life a little bit and come back. And what I was concentrated on really watching is the VIX. The VIX, we've seen this on other times where we have either 1 or 2 days of volatility. The VIX will usually start to sell off, and that'll give an indication that the fear is falling to the downside. So we did not see that. We saw a little bit today. We saw it like just barely kind of tick off the highs. And I'm wondering because, I was wondering right around 315, 330. I'm like, okay, well, it's not a sell signal yet in the VIX. And I'm like, it's just basically coming into a trend line. I'm like, we could really have a kind of nasty close today if we don't get the sell signal because we just kind of fell into the trend line, which I'll talk about in 2 seconds. So that's basically what I saw today, and I really didn't buy anything towards the end of the day. I bought a couple things in the beginning of the day which did not work out, which I'll talk about. But so let's go ahead and let's see what do we want to go to first. Let's go to an index review, and then we'll talk about the so now what after that. And also, I'm going to kind of mesh this into one thing. Signs. Watching some things that are non-equity related, like the VIX, like the Japanese yen. So let me just cancel out of this. Oops. There we go. Perfect. All right. So first things first. So I want to have all my indicators on here. Let me take off market breadth, and then we'll kind of just we'll try to make my charts as simple as possible for everybody to read. I know I've got a lot of lines on them, but most of what I use, most of what's on my charts, I use regularly. A lot of people just put stuff on their charts, I think, to make it more complicated. But so here was the VIX at towards through the day. I mean, what a move up in the VIX. I think we were, and I'll put the actual VIX on rather than VIX futures. What 46% today. So all in all, in terms of absolute value, the VIX going up to 15 is not the end of the world. However, the magnitude of the advance of 46% move is pretty big. So, what I was kind of looking at is at the end of the day is like, right around, like I said, around, I guess this was 2:45. I guess I'm off a little bit in time, but right around 2:45, 3 o'clock, we started to see the VIX come in a little bit. You see a couple of red bars, but I'm like, all right, well, notice all day the VIX was above, and these lines, by the way, on my chart, the yellow is a very fast moving average. It's a 5-period exponential moving average. The blue line is a 20-period exponential moving average. The reason why I have these two on here, it really gives me a good sense of, it's almost like training wheels. It gives me a good sense if a trend has been broken, or if a trend is still intact for the day. And this works on any time frame, but I use the 5-minute for day trading, or for looking at the day's moves. But, so once we started the day, even pre-market, you could see how price basically never went below, and you never got a sell indication, which I look at when the yellow line crosses below the blue. A couple of times it almost happened, around 12 o'clock, and then it almost happened around 2, and I was like, around 5 o'clock. And I said, okay, well, we've got a couple of red bars here. Let's see if we need the VIX to go a little bit lower here to generate a sell signal in the VIX. And sure enough, it was saved right here with this bar. And I'm like, well, that's not a good indication. And the next bar is higher. And then we kind of know what happened with the end of the day. Markets basically finished on the lows. It looks like they're coming up a little bit from the lows, but um, I think a lot of traders in volatile days like this, they've got the accelerator all the way down with selling all the way to the close. Then this first green bar right around 4 o'clock, first green bar was kind of right at 405, and that was the cash close. So once you kind of take your foot off the accelerator in terms of selling or buying, which is not today, but selling, you'll see usually a let up and a move higher because the sellers were pushing so hard into the close. As soon as you take your foot off the accelerator, you usually see a little bit of a pop up, which is what you saw here in this green bar, but very, very short lived. So what do we do now with equities finishing on the lows, no rebound whatsoever in the day? So that tells me in a normal situation, again, a lot of things what I talk about, there's never 100% certainty, but I know from experience that when we close on the lows, we're usually not completely out of the woods yet. So a couple things to look for in the next couple days. Uh, Equity wise, you could look at small caps. So IWM, they got shellacked today. They were down 2.7%. Usually, when the small caps lead the way down, it's risk off. When they start to lead up, it's risk on. So these have been troubled for a little while here. You could see that we broke the purple line on my charts, and I'll try to explain everything. If you don't know what's if I don't explain something that's on my charts, please let me know and I'll go over it, because sometimes I assume that everybody knows what these are, but in my head I don't do a good job at explaining sometimes. The purple line is the 50-day moving average. The white line is the 200-day moving average. So really, the best thing that I know to tell you if you're in an uptrend or a downtrend is the 200-day moving average. Shorter term moving averages are good to tell you that something's changing, especially when we've spent a long time above a certain moving average and we break below it. Usually what happens is if you don't turn around right away, you usually end up going to the next moving average. So I don't have the 100-day moving average on here, but really the 200-day moving average is next for IWM, and I could actually do it over here so it's a little bit more simple looking. So this way you could see the 100-day moving average, which looks like we also breached that as well. So we did this back towards the end of March, towards the end of April, and we managed to bounce right back. So this time may be a little bit different. We've got the 200-day moving average. That is really your line in the sand. If we start to go below, break the 200-day moving average, I usually run for the hills. Why do I do that? Because we've seen this before. Usually when you break the 200-day moving average, there's not a lot of good things that will happen after that. And if you don't reclaim it quickly, like I guess we did here, we reclaimed it like within a day. That's a good thing, and you can get right back in. So if you got stopped out here, you can obviously get right back in on the 200-day moving average. But just to kind of give you an example, you can go back in time. Let's see if I could do it this way. All the way back with looking at SPY. And again, I don't want to scare anybody, but I want to give you guys an example. Going back and SPY, which I guess it's not going to show me the 200-day moving average, but back in 2007, 2008, you break the 200-day moving average. I mean, let's say it's up here. I guess we could just use the 100-day because Bloomberg is not letting me go back that far. But let's see if I could do this. Maybe it will actually fill in. Yeah, it looks like it'll fill in. But you go back to 2007, back when we really had a problem on our hands. Once we broke the 200-day moving average, that was it. And people didn't honor that. I guess we had a false breakdown here in 2007, and then 2008 it was good night. So once you get below the 200-day moving average, rather than stick in trades, you have to define the trend someplace. And I guess it doesn't really matter where you do it. For me, it's the 200-day moving average. That's where I would be drawing the line. Obviously, this is what we did all in 2008, 2009. If you got out at the 200-day moving average, you missed all of this. And you could have gotten right back in the 200-day moving average. And I don't think we really have violated it, a couple times in here. But I think that's really the best thing to do. Here we broke the 200-day moving average back in 2011, and it would have saved you all of this, right? So that's why I think that's what we want to pay attention to now. As I fast forward, there we go. So today, SPY's broke the 50-day moving average. We spent a lot of time above the 50-day moving average. So I think this is a little bit of a warning sign, especially with the volume for today. Could we bounce on the 100-day moving average? Yes, and really for me, I there's a couple things that I'm watching. One of which is the 100-day moving average, because we've got a big distance. We don't have that much of a distance between the 50 and the 100, but we've got a big distance between the 100 and the 200. So that's where I'll be drawing the line in the sand for me really to get out of equities. I don't want to be in hanging around while we're have a big gap between the 100-day and the 200-day moving average. The other thing that I'm watching, which I wanted to go back to think or swim, is the bottom of value. So that's 233 in SPY. That's also a really good indication. Just like with the moving averages, we break below the value area. That's a bearish sign. So use whatever you like, but come up with something, especially in your trading plan. Having a trading plan and saying, hey, this is the level where I need to get out and I can get back into, I think is really, really important in trading, and really is much more important having a system and having a trading plan that will tell you where you need to get out of the market, as well as when you need to get into the market and buy the dip. So that's kind of a quick overview. We saw this with NASDAQ as well. NASDAQ, besides the political stuff that happened, besides the headlines that happened today, one thing that we've kind of been watching for a while is how overbought the Qs were. It's really difficult when the Qs stay, or an index stays overbought for a while, but generally they don't normally spend that much time, and I know we've seen a couple times here where we've been overbought for a while, and it makes it rather difficult because when we're this overbought for this long, all it takes is something really a trigger, and because you're so overbought, the money is going to come out quickly, which is kind of what we've seen. So we're not anywhere oversold yet, so not even close. So that's the thing that you have to be a little bit of wary of. In terms of the 1 hour chart, yeah, we're oversold a bit. So you can see, of course, the volume here on the 1 hour bar. We are oversold definitely on the short term, but we can come off this and go right back down. So a couple of things that we noticed today, and for the 5-minute bar, and then I'm going to get into what I wanted to talk about originally, which is sectors and a sector review. But I think it's important to kind of look at the major averages and kind of really do a thorough analysis. And then we can drill into sectors. I wasn't going to spend this much time on the overall indices, but market events are a little bit different. One thing that I noticed today was kind of gives you another sense of how overbought we were. These purple lines are VPOCs. I've explained this before, what these things are, but let me try to explain it maybe a little bit differently. So what these are value areas that are on my charts. This is where most of the buying and selling has happened and on a previous period. So this is the volume profile that you could see in gray. And what this will do is every time there's this value area, what our indicator will do is we'll draw where the buyers and sellers, where the most price action, or where the volume has occurred at price. So not volume on the bottom of your screen, but volume at price. And why that's important is that's where buyers and sellers have met up before. The point of control, the yellow line on the charts, is where the majority of buyers and sellers have met up in a given period. So not this time period, but back here. Believe it or not, this is where, I should be talking about this volume period. So this yellow line is where a lot of buyers and sellers have met up previously. That's the highest volume, this yellow line. Same thing with back here. It was here. This was the volume. So the purple lines are created when we go through quickly. Price action moves quickly, and we never return to where buyers and sellers have met up before. So why is that important? Because sometimes it kind of leaves basically a mark. It's where a lot of buyers and sellers have met up before. Therefore, once we start to gravitate down or up, in this case it's down, price likes to remember. Price likes to gravitate towards where a lot of buyers and sellers, where the price does remember where a significant amount of buyers and sellers have traded before and met up. And we could see that today, for example, we hit 1, 2, 3, and I think there should be a fourth one down here. Whoops. I think I'll need to zoom out, but it's not letting me do it right now. So it does look like this is an NQ. It does look like there's another one down here as well. So we actually crashed through 3 of them this morning. And, we've got another one that's lingering down here. So again, sometimes when these things linger down here, they get taken out. And that's my whole point of talking about that. You could see, for example, every time we took one of these things out, we kind of reverted back. We took it out, we reverted back, and so on and so forth. We did this in AMD. If you go to the daily chart in AMD, you can see the last time that we rose up, we hit one of these VPOCs. We did this a couple times. We hit the price here and reverted back, and last time we hit the price here and reverted back. So these things work pretty well. Okay, so to go to next. So there's a couple of things that I have my eye on for S&P. The 50-day moving average, we'll see if we could retake it. If not, we could be going to the 100-day moving average. I'm really watching in S&P futures. I know I gave a SPY level before, but also what I was saying was this morning was support, which looks like we fell through. Now we could retake this. It doesn't mean once we violate the support, which was, I'm sorry, the areas are not showing up. But I think it was 2363.75, or sorry, 2363.50. Once we broke through that, we could of course reclaim it. It's not the end of the world. However, the next area of support would be 2331. So that's what I'm watching for in the S&P. If we reclaim this sooner than later, I think that would be really good. And that support, but right now, what was support will become resistance. So that's the way you have to look at it. Any questions so far? And then we're going to get into, so talked about 23 minutes already about the major indices, but I really want to get into sectors, which is mainly the subject of tonight's webinar. But I'll pause here for questions. And then we'll talk about sectors. Just a couple other things before I go into sectors. So I mentioned indications of things that you need to kind of see for the market to turn around that you want to keep up on your screen is the VIX, the yen. Also, if the yen and the VIX continue to climb, that basically means that there's still a lot of risk in the system. Once the two of those start to back off, risk is starting to abate. Until that happens, I think you want to tread very carefully in this market. Usually these types of sell-offs usually last a couple days. I talked about whether or not, how we closed today. Basically how we closed today is not conducive of, an immediate rebound. Not to say that it can't happen tomorrow. I think we're very headline driven, but it's not typical that we see a close on the lows and then we snap right back the next day. So tomorrow we'll kind of watch some support levels in the trading room. No, I think I went over that towards the end of the, no, it's about an 85% for June. I went over that in the trading room. I thought you asked that question towards the end of the day. I see a couple headlines out right now. I'm speaking of Bloomberg. Trump welcomes appointment of special counsel on Russia. So it's 82%. So it's come by. Rate hike I think is the least of our worries right now. Last week it was about 100% that we're fully pricing in a rate hike. Now it's about 82%, which I think makes complete sense that it's backed off a little bit. But I think they're pretty dead set on raising interest rates. They set it up, you know, a 1 or 2% down day is not going to change their mind. If markets go down 7 or 8%, I think then you have a more serious correction. 24-hour volume. Okay, so that's what the rate hike is pricing in, but I think right now, I think that's the least of our worries. So I've already talked about the VIX. I've talked about the yen. Gold is also something to watch, and treasuries. Those are your non. Going back to the PowerPoint. What I want to just talk about is give you guys some hints that to look at other places besides equities that will give you a hint that risk is diminishing or abating. So this is not what. There we go. Sorry about that. So those are some of the signs to watch that I think will give you a hint. Next, I would say, again, don't worry, I'm going to get into the sectors in the international markets. But next, what we said in the beginning of the day when we had the volatility in the morning, I said, watch for aggressive call buyers or put buyers. That's really going to give you a good signal. We did not see that at all today. We did not see a ton of put buying. We did not see a ton of call buying either. So it looks like people just kind of sat on their hands today. You'll be able to see that. So that's another good indicator when institutional money starts to flow back in. We saw a couple very like event-driven type trades. We saw some Marriott calls go up. We saw Colgate calls go up today. We did see a couple semis, but Micron was actually there was somebody who was buying Micron no matter what it did today. Micron got crushed today, and there was call buying throughout the day. But in terms of just a lot of buying, it was and a lot of the call buyers that we did see, besides those cases that I just mentioned, were very, very small. So that to me doesn't also give me the feeling that the volatility is over with. You're going to see it, and I mentioned this before when we've had corrections. You don't want to be the first one in. I liked what I'm stealing this from Jim Cramer. That's why I've got JC over here. He said, "Don't be a hero in this market. There's no reason to be the first one in. You really have to be patient in these markets, unless you've got a long-term view. But if you're going to put on like something like a call option for like a month out or something like that, you have to be aware that you could easily lose the whole premium very quickly. So you could take shots here and there, but just be comfortable that you may lose the whole premium if we continue to slide a little bit. So there's definitely things like that to watch. The institutional flow and where the buyers come in, that's usually a really good signal of when they start buying. And I'm not talking about like 500 contracts aggressively. I'm talking about repeat buying like we've seen in a number of names before, where the buyers just keep coming in for Apple, or they keep coming in for Facebook, or they keep going after various different semiconductor names. So I think that is really what you want to watch. Going back, of course, those non-equity indicators to watch, like the VIX and the yen, gold and treasuries. And then in terms of equities, watch support levels and watch where, if there's buying or if people just are too afraid to buy. Because I don't want to be the lone buyer in this market. We're not big enough to move this market up. We have to wait for other buyers to come aboard. And then also big cash prints, same thing. It's what I look at. I don't know if this is still going to be fresh. It should be. But for example, this type of thing, where the volume was in the SPYs, usually when you see big volume in ETFs, that's usually when volatility starts to take control. So when you start to see SPY trade multiple 30-day volume, that is also an indication of volatility. Same thing. I mean, look at VXX for example. 171 million shares today. Normally, the average 30-day volume is 55. So this also needs to quiet down. You can't have the VIX trading 3 times normal volumes and expect markets to come back right away. And you could see this is sorted by the biggest volume of the day in ETFs. And you could see just anytime, and again, sorry, I'm not explaining, but anytime you see anything greater than 1, that means greater than the 30-day volume. So a 2.4 means 2.4 times the average 30-day volume. So SPY, for example, trades 72 million shares, 30-day volume, which is lower than it has been over the last couple of years, and 172 million shares traded today. All right, so that's a sure sign indicator. I used to, when I was at Merrill Lynch, I actually used to have something on my desktop that would show me how much ETF volume was as a percentage of overall volume. And anytime ETF volume gets to be about 25 or 30% of the overall day's volume, you got some volatility, right? Because people are using ETFs to make quick decisions and ride some big moves. All right, so that's enough of the macro review. So what I want to talk about is sectors, which is the original subject of tonight's webinar. So we're going to go through a couple sectors and kind of look where the strength is and look at sectors where I want to avoid or possibly short. So let's talk about a couple of the really strong sectors. This is year-to-date performance, and this has been updated for today's activity. So let me just make sure you guys can see all that. I've got on the top of my list Robo, which is the robotics and automation ETF. So if you caught our webinar like a month ago, where we talked about robotic stocks, they've been by far and away the best performer year to date. I think we saw a couple of them that were kind of MZOR was up today, which is pretty crazy. I think Harrison was mentioning earlier. He said, take a look at the 52-week high list today, or look at the recent high list today, and look where the strength is today. And some of these areas are pretty resilient, especially some of these small cap names. Keep in mind, a lot of these small cap names like MZOR, it's kind of intuitive why that name didn't go down today. Any ideas why MZOR didn't go down today? I'll let you guys think about it for a second. I don't know what that means. WEF 22. I don't. Yeah, Lori says it's not in the index. It's so when all the selling is happening in SPY and Qs and IWM, some of these small companies, especially these newer companies, they're not in any indices, so they kind of get they're unscathed using over. So if they're not in any of the if SPY is getting sold, we go back to this volume for the day. SPY is trading all this volume, and all these names are getting pushed with it. If MZOR is not in the S&P 500, it's not going to get subjected to that, right? It's not where the big sellers are going to be. So that I think very tight held is also, it's very low volume. It's off the radar. It's not in my answer was going to be, and I think Lori hit the nail on the head, is that it's not in any of the major indices. So therefore, it's not going to get sucked up with the with the selling vacuum, right? So let's look at a couple of these charts. Let's look at the Robo chart next. I want to talk also about FDN is my internet proxy. Obviously these have been the strongest areas of the market. Semis, technology. Everybody talks about the strength in technology, but really semis have been outperforming. And the FANG stocks, the FANG stocks are the highest holdings in this ETF. And another one that nobody really talks about as well is home builders. The home builders have been doing really well. They're still up 17%. I don't know if they really got hit hard, but we'll go over those charts. So first one we'll start with robotics. It's definitely overbought up here. So this would be a great. The last time it's found support at the 50-day moving average, reclaimed it, and hasn't looked back since. So today really puts things in perspective of this run that we've been on. And you got one small, in this case, it's a blue bar. I'm still in robotics. I'm in this in my IRA. It's probably my biggest position right now in my IRA. If it happens to get back to the 50-day moving average, I'll revisit this. I've got stop prices out there below the 50-day moving average. So that's my line in the sand for robotics. But certainly very, very strong. And I just need to update this chart. I apologize, but I want to make sure that you guys can see the amount of fund flows that have gone into some of these areas of the market. So this will just take me 2 seconds. Wait till this comes onto the screen, and then I just need to change this to a histogram. I need to change this to panel 3. I need to edit this up, down, positive, negative. And that should do it. And voila. So what this bottom graph is, and again, you're not really going to see this anywhere else. So, at the very least, if you're new to Tribeca Trade Group and just joining us for tonight, unless you have a Bloomberg terminal, I don't know of any charting software that shows you the investment. So this is not like the Chaikin money flow. Chaikin money flow is like looking at volume, and I know that he calls that the money flow indicator, but it's not really pure money going into a. It's making some general conclusions. So it's not really money going into. They're making a conclusion about whether or not volume is going up when or volume on up days and volume on down days. That's in a nutshell. I'm probably getting that wrong a little bit, so I don't mean to say that wrong. But this is different. This is actual money going in. These are inflows, and this is outflows. So you could see. So why am I showing this? Because you could see all the money that's been going into this ETF over the last year. It's crazy. This is a newer ETF. So you could see it. Nobody was really doing anything with it until about December. So hence why we gave a whole webinar on this about 2 months ago, was because I was noticing all the money that was going into this. So again, this is much different. These are actual fund flows. This is money going in. These are creations going into the ETF. As people buy, as investors buy, especially large quantities, the market makers have to do what's called, they have to create more shares. It's a whole process, which I'm not going to go over, but it's essentially real buying that's going on. So I think this is an area that I want to continue to be in, and that's the reason why I'm going through this. I think next on the list is home builders. Home builders are getting they almost started to break out again. And let's see if I'll do a 6-month chart here. They started to break out of this range. They've really been in this. They made most of the gains in the first couple months of the year, and then they've been kind of moving sideways and gently moving higher. They recently got to a 52-week high, and then of course with everything kind of got smoked down. The flows into this one haven't been super. You could also look at, and again, why I look at ITB versus XHB. There's a big difference between the constituents. I personally would wait. So I don't have the RSI on here. It's been pretty overbought. I mean, I don't think, in a perfect world, I would like to see this at least come down to the 20-period moving average, if not the 50-day moving average. So it's no longer overbought. I mean, look at this thing. It got to, so besides all of the headlines, and this is kind of the point of this, besides all the headlines, look at how overbought this thing got. If you use an RSI, basically anything over 70 kind of tells you that things are a little bit too heated. It got to an 83. That's a lot for a whole sector or a whole group of stocks, never mind just one stock. So I would basically make sure that we hold today's lows. If we start the day and we start going lower, I would watch for a bounce on the 20-day moving average. That's basically, it's really tough to kind of use. Normally I would say if we take out the open of today, but it's such a big candle for today. It's something I would definitely keep an eye on. Let's put it at that. Especially, I think if it comes in a little bit lower, I would be a buyer. I would definitely be a buyer if it holds the 50-day moving average. But I think let's let the markets kind of process this. And I really think for the next week, I don't think, you have to go back to like what the market doesn't like. The more there's always uncertainty in the market. So let me make that statement first. But when there's really a lot of uncertainty, people tend to run for the hills. The market, people really get out of the market. So I don't think we're at the point yet where from what I understand, the Comey's going to testify next week. So I think you kind of have to be patient and kind of look towards that. Do I like this sector long term? Absolutely. Okay, so next one. So I want to move on because I want to make sure that we cover as much as we can here. ITB is a little bit clearer. 50-day moving average. If it holds the 50-day moving average, maybe gets back above the value area, which is basically 32.43. That would be my area to get back in, and we have to see a hold of the 50-day moving average. But again, this is where the strength has been. This has been up 17%. The housing data that came out this week was a little bit lackluster, so kind of makes sense. I was surprised that it held up as well as it did. But you remember yesterday, Home Depot came out with good earnings, and Home Depot is actually in this ETF. So again, I want to try to cover these things as quickly as possible, but I always like to make this point. Always make sure that you look to see what's in the ETF versus what the ETF calls itself. So this ETF has 62% home builders. You also have building materials and retail. So Home Depot and Lowe's are in here versus XHB, which everybody calls the home building ETF, and that's formally its name. But if you look, it only has 28% home builders. It's got a lot of building materials. It's got a lot more retail in it. So I tend to look at ITB because I think that's really the true home builders ETF, even though it's called the home construction ETF. I know, confusing, but always take a look at what groups, what stocks are actually in these ETFs. It will sometimes blow your mind to see them not in there, or not represent what you think it is. The fact that it's called the home building ETF, and it's got 20% home builders is a disgrace to me. So that's what I'm watching in this one. I think in a nice uptrend. Let's just see if it holds here the next couple days. Again, think you have to be patient. Next, we talked about semiconductors. Big move down, but again, look at how overbought they were. SMH got overbought pretty quickly. The whole ETF was about a 77. Not the place where you want to buy. You want to be taking gains. Also, it's good to analyze these on a case by case, an individual stock name. I did buy one or two names recently in semis that were not overbought. But things like AVGO, I was kind of stupid, I think, in hindsight for not taking. I took profits in this one. I had a call spread in this one. But look at how overbought AVG Broadcom got. Same thing with Applied Materials. Super overbought. And 80. I mean, that's usually a warning sign. Look at the last time. Last time it got to an 80 RSI, it cooled off for a while. So look at how extended these things got. I mentioned I have these moving averages as I call them sometimes training wheels. The reason why is because it tells me when things get too extended. I don't like to buy when the yellow line is way above the blue line. I'd rather buy when the yellow line meets the blue line. Just common things here. The last time that semis dipped and got to that 50-day moving average, this is kind of interesting. And this kind of gives you a good indication. Notice the volume. Let me go to the 1-year chart. Notice the outflows the last time that there was some market volatility. Can't even remember this, but it was about a month ago. And look at the volume. So the volume, this confirms, the outflows confirms that people were taking money out. People got scared pretty quickly. This was, I think it was before the week before the first French election, I want to say, where there's basically a buyer's strike. But look, I mean, that ended up being a good buying opportunity. Again, you basically had to wait for it to reclaim the 50-day moving average. But look at the buying, that the buyers came right back in. So again, I would, the outflows don't show up until T+1, until trade date +1. So I bet you tomorrow we see a big outflow in technology and in SMH. This volume usually is either buying or selling. I think we know what it was today. So we'll see if this comes back into the 50-day moving average. Last time it was a great buying opportunity. So that's kind of what I'm waiting for in this whole group. Any questions so far? I'm going to get to international. Don't worry. I'm going to get to international. So a couple more sectors. I'm not going to go through. I'm not going to go through everyone on the list. I just wanted to go through the market performers, the biggest performers. We talked about same thing with it's the same story with tech. It's interesting that GDX is also up here, up 11.7% year to date, and IBB quietly up there. Consumer discretionary also doing well. A couple of the bads. So these are the areas that I want to be in, and I want to wait for some of the things that I talked about in the beginning of the presentation, for the VIX to stop going down, for the VIX to stop going up. But I think we're going to have a great opportunity to kind of rebuy in some of these things. All of these areas, most of these top five names were all extremely overbought going into today. Same thing with FTN. And then I will talk about some of the worst performers. FTN hadn't. This one doesn't see a ton of ETF activity. This is just a good proxy to use for the momentum names. Your FANG stocks. But look at this thing. I mean, this was an over 80 RSI. You're kidding me, right? I mean, now granted, we don't usually come in this hard. Usually we'd come in a couple days. We got it all in one day today. But man, I mean, this thing was really overbought. So it was overdue for a pullback. Today was a dramatic pullback. But man, these things were overbought. Okay, so some of the worst performers. I know Harrison wants to go over international, which we're going to get to, which is really what excites me. So we'll go over a couple. You could take your pick with energy names. We'll just look at. I know everybody looks at XLE, so XLE. We could look at XRT as well. We could look at the banks as well. So let's look at XLE. All right. So when I talked about the 200-day moving average earlier, how really, and I think I'm borrowing this from somebody on Twitter who I like very much. His name's Larry. I think his Twitter handle is LMT978 or something like that, 987. Really good guy to follow on Twitter. Really nice guy. Shares all of his trades that he does. And one of his sayings that he uses that I picked up on is below the 200-day moving average, nothing good can come of the below the 200-day moving average. And I really firmly believe that. I think once things break the 200-day moving average, get out. Again, I can't give any recommendations here, but that's how I trade. Also, you could see with XLE, the 50-day crossing below the 200. Where's it going to go? I have no idea. But wait until the price action reclaims the 200-day moving average. That's your sign for whether or not it's an uptrend. Right now, it's in a downtrend. How long is the downtrend going to last? I have no idea. So there you go. Yeah, that's his Twitter handle. And same thing with trend. If is anybody a trend trader here, or does anybody consider themselves a trend trader? I don't see anybody jumping forward, but yes. Okay, so Lori, how long does the trend last? I'll see if you guys give a couple test questions. How long does the trend last? And thank you for participating, by the way. I'd like to try to make these as sometimes I feel like I talk too much during these. 1 to 3 months, guess, until it doesn't. I use it. So usually, if you've ever read like a trend following book, I forget what the main book is, which I love, is I think it's just called Trend Following. You never know how long a trend is going to last. We don't know. you never know how long a downtrend is going to last until it actually breaks back above. So you could use anything. I use the 200-day moving average. You could, I would say the 50-day moving average, not so good. I would say probably the 200-day moving average. I know some people, I think, use the 150-day moving average. One of these, that is your trend line. That's basically the long-term trend. I guess you could use the 50 for a short-term trend, but we never know how long a trend is going to last. Unless you have a crystal ball, you're never going to know until it actually breaks breaks back up resistance. In this case for XLE, or in the case of the strong sectors that we talked about, until they break below. We can't predict these things. Nobody can predict them. Although you turn on CNBC or Bloomberg and everybody has predictions, but nobody can really predict the market. The best you could do is follow the trend as long as it lasts. Again, my opinion. Energy is a special sector, but in any event, energy is in a downtrend. What else is in a downtrend? Retail, which it's kind of been fluctuating back and forth. This has kind of been trendless because it's I would say whipsaw all over the place. Breaks back above, breaks below, breaks back above, breaks back below, below. I would really stay away from this. It doesn't look like it's doing anything. It seems like it's confused. So even looking at a 5-year chart of this, not a place where I would really, look at this thing. Unless you're selling call spreads and selling put spreads, I don't think there's any strength here. It certainly hasn't broken support. So not a place, unless you want to be like, use this as a pair trade, maybe go long Amazon and short XRT. It's kind of a nice pair trade to do. And I know a lot of institutions have that trade on, but this is kind of trendless. I'll look at one more because we just don't have that many sectors that are breaking down. There are a couple other sectors, and I put this in my newsletter every weekend. So if you're not a member of Tribeca Trade Group, I'll give you a sample of what our newsletter looks like on the weekend. But I break this out. I give you a whole sector map based on the moving averages. You could see a couple of them. I have energy as an avoid. I had telecom because it's below all the 50, the 100 and 200-day moving average. So you really don't see, until this point, until today, things breaking down, because even though some sectors have been starting to get weaker, they really have been small weights in the S&P. You look at the weights, and most of these sectors that we're breaking down are like, it's what, 13% of the S&P, where all of the other major sectors, again, this is from this weekend, so this hasn't been updated. I do the newsletter on the weekends and kind of give a full view of all these. But, things will be different in this week's newsletter, which I'll review. So that's it. I don't really want to talk about telecom too much. I'd rather talk about international. Much different picture. So any questions about U.S. sectors before we move on to international? And I apologize for going so long tonight. It's been about 50 minutes, but there's a lot to talk. There's always a lot to talk about, and I wanted to talk about kind of the heat of the moment of what we kind of experienced today, and try to give you guys a couple things to look at. Okay, good. So let me move on. So international, and if you've listened to some of my videos on Twitter, I think the U.S. market and a lot of people at this point just turn off CNBC because a lot of it is just noise, because they keep talking about the same thing. They keep talking about, oh my God, the Trump rally is vulnerable. So look at the difference between in U.S. sectors. Now, we do have some nice performers. We got these 5 top performers. We've got a lot of sectors in the middle. I just wanted to hit XLF before I jump to international. This is another one that people are so in tuned to. They talk so much about this. It almost looks like a head and shoulders pattern is developing. We don't know that. The one thing I could tell you is that the 50-day moving average has acted as a really good barrier. It's almost been like a dome. Sorry, this is not coming out the way I want it to. And I think it's because I've got too much of this stuff. But I think, I would be wary of the financials right now. I've said over the last couple of months, even though I took a little bit of city position today because we saw a lot of call buying in it, this is not a place that I want to be. It's been struggling here for the last couple months. It broke below the 50-day moving average, and it has not been able to retake it since going back to March. It's looked really, really unhealthy. You could see the 50-day moving average looks like it's now crashing below the 100-day moving average. Don't see any reason to be in any banks right now, except for the only one, only reason why I got into Citi, because I looked at this and I was like, oh wow, this looks a lot different than all the other banks. Maybe if it holds that 50-day moving average, could end up being a buying opportunity. Which one? She said that the banks were crappy. I guess so as well. So, so that is. I just wanted to make sure I wanted to cover financials because so many people love to talk about them. I don't know why, but they do. Okay, so what's different here about international sectors? This is year to date. 30 Poland, nobody talks about Poland, up 32%, India up 24%, Spain 23. And then it goes on and on and on with a lot of European and a lot of Asia markets. They are blowing us away year to date. They talk about this if you turn on CNBC for a couple months, no one was talking about it. Maybe in the last 2 months they've started to be a little bit more cognizant of it. I applauded. I have to say I liked what Josh Brown has to say on the halftime show of CNBC because he's been onto this as well. There's been a global rally. The rest of the world has been on the mend. If you remember from a couple of years ago, how we were worried about Europe falling apart in terms of their economics, in terms of Italy, in terms of Spain. They Morgan Stanley had a term out called the Fragile Five. That's gone. We don't have to worry about that anymore. But, things could always change. But in terms of the overall global market, I mean, look at the performance here. You go back to the S&P for year to date, we're up 5.5%. Now, there's pockets of strength. The Qs are up 15%. Small caps are essentially exactly flat for the year. But look at we are really, so forget about the Trump rally, because that's what that's what CNBC has kind of trained everybody to thinking is going on. The global market has gotten to be much better. Now, of course, I would assume that Asia is going to sell off tonight and probably Europe tomorrow. But look at the strength that's been going on in these places. The reason why I picked up on, if you look at my Twitter feed, which is my Twitter handle, which I'm sure probably most of you have. Is at C. Fromhertz. And if you put my name in and if you put PLND, why I started to pay attention to this one, you go back to inflows. I noticed something was going on here. Which I don't know if I could get this back. What happened? Well, in any event, that's a bummer. Let's see if I could get this back. There we go. It's still not showing up the way I want it to, but that's okay. You could see basically a break above the 200-day moving average, and there was some decent inflows. You could see the volume pick up here in the Poland ETF. I am not an expert on Poland. I don't know anything about their equities. All I know is it broke the 200-day moving average and has not looked back and is up about 30% since it did it. So I started to notice some of these things going on, and then I started to notice the inflows, which have really changed for most of back in 2015, I would say most of 2015, 3/4 of 2016, especially 3/4 of 2016, every week there was outflows in European ETFs. Every week there was like another $500 million taken out. What changed in the third quarter of 2016 is that the money stopped coming out, and then what happened is money started coming back in. So you look at and I hope this will work on here, but if you look at VGK, look at the money that's been going into there the last couple months. So this has been new. And again, this was the outflows that I was talking about. This is just one ETF, but you could see all these red, all these outflows, in the past. Now we see a different trend. Look at the money that just recently came into VGK. Look at EZU. EZU is another one. Look at the inflows over the last couple months. Look at all the outflows. So this is more indicative of what I just talked about. Again, these are outflows. These are real money coming out. So like I said, for most of 2015 and 2016, one by one, we could look at these ETFs and you could see how there's a trend change. First of all, and we've been involved in these in the room. I'm still long FEZ. I got long FEZ a couple months ago. I'm still long that one. EFA, this is all of the international developed markets. Look at all the inflows. This actually started prior to the European inflows. But if you break down what EFA is, it's international developed. So it's basically half of the ETF is Japan. And don't take my word for it. I'll bring this up here. Yeah, you could see it's 22% Japan. So sorry, not 50% Japan. I was wrong. 22% Japan. It's got UK in it. When you add up all these European countries, it's about 50%. You got France, Switzerland, Germany in there. Australia is also in here. Anything developed and developed international. You also have some Hong Kong in here as well. You got Netherlands as well. But this started before the straight up European inflows. But you could see starting back at the end of the year, it really started to heat up in terms of money being added to this area. Again, it was pretty dormant. There was some inflows back here, but basically for all of 2015, 2000, and half of 2016 at least. Same thing with this one. VEA is essentially the same thing. This one's a little bit different. There's been actually some accumulation that's been going on for a while now. Why do people go into VEA versus EFA? Same underlying index, same group of stocks. VEA is Vanguard, and their management fee is cheaper. So a lot of these charts, I don't need to go through these one by one because they almost look identical. A break of the 200-day moving average, a break of the 50-day, the 100, golden cross. Well, this one's a 50-day crossing the 100-day moving average, and it hasn't hesitated since. Every time this thing has retested the 50-day since it broke out has been a good buying opportunity. Is it a little extended here? Absolutely. So these are things to kind of think about and put in your back pocket. It's a little bit on the daily chart. It's no longer overbought, but again, I would wait, till the yellow line meets the blue. So we at least get a pullback to the 20-day moving average to initiate a new position. Even better, the 50-day moving average. That was a great buying opportunity here. This was, I think, before the election. Again, not as overbought as it was. These will have very small candles for the most part because Europe is open while we're closed. So, these are benchmarked to European stocks. Of course, half of, Europe stays open through half the day for the US markets. And then they basically don't move too much because Europe is closed. Same thing when you look at it, that EM. So here's another one that we'll look at. VWO. Every week as well, inflows going into emerging markets right now. So really, really strong. Almost has not exactly the same looking chart as international developed, but this one took a little bit of dip after the U.S. election, basically a W pattern, broke above the 100-day moving average and hasn't looked past since then. What else? IEMG, which is essentially almost the same thing. This one, look at the inflows to this one this year. Unbelievable. So really that's where the market, so why I'm bringing this up, the point of all this is to show you where the money has been gravitating through the last few months. It has not really been into, and I do have this as well to give you, not that. and I'm sorry, I can't blow this up anymore, but basically this is I'm sorry, disregard. I put this together right before the presentation started. This is month to date. This is one day, and this is month to date, not 5 day. So look at the amount of money that's been going into international ETFs. It's $15 billion. There's actually been outflows to U.S. equity. Hey Don, how's it going? So really alarming is the fact that there's been $15 billion. Again, that's month to date, so the beginning of May. So a couple weeks, $15 billion that have gone. This is just straight ETFs. Some of these ETFs that I've just talked about. $15 billion going into international equities and $8 billion coming out of U.S. markets. So that should tell you something in terms of fixed income. This is not all treasuries. Some of that is corporate bonds. I didn't break that down for you tonight. Anybody want me to go over a couple more? Again, a lot of these look very, very similar in terms of international markets. Again, this is my fund flows that I was just going over. This is where I compile the data. I run a macro every day that spits out the data for me, and that's why you'll see me put this data out on a day-to-day basis. EPI, again, people haven't really been talking about India maybe until the last month, up 24%. And India was actually up last night, was one of the few areas that was that. But again, it looks very similar, right? A break of the 100-day or the 50-day moving average. You got a golden cross here, the 50-day pushing through all this. So going back to what we said about trend trading, I don't know how long this trend's going to last, but certainly, if you look at a 5-year chart, we've gone through resistance. It's a brand new high in these equities. So you never know how long the trend is going to last. And I think the best thing you could do is try to buy dips. Buy it when it maybe gets close to the 50-day moving average. Notice that the price hasn't hit the 50-day moving average since this breakout, but maybe we might get it in the next couple days. Because even though international has been extremely strong, it's not completely impervious to risk. We're all kind of connected, right? When there's volatility, just like when there's volatility in China, it usually affects our markets as well. Plus, if you look at longer term charts, we're more extended. We're more extended and pricier than other world markets. Yeah, I mean, I think we've just recently started the trend of starting to international markets have started to outperform. You look at most of this has been sideways for the last couple of years. Um, a lot of those markets have been in downtrends. You look at we could look at a couple more here. Any questions, by the way? I want to make sure I keep asking if there's any questions. But it's the same thing. Spain, even Mexico's up 17%. Brazil's up 17% year to date. Frontier markets are up 17.5%. Hong Kong, we could look at EWH, which we did see call buying in EWH about 2 months ago. I didn't take it, but you could see this one's actually just starting to get outside. It's basically been for 2015 through 2016. It's been troubled. So it just started to get going, and it went or it started to get going very quickly. Again, looking at that performance and how much it's been outperforming has been nothing short of remarkable for most of these areas. So again, I don't know how long nobody does, again, knows how long these trends are going to last, but I want to be a part of it, and I want to ride the trend as long as it goes on for. If we do get a little bit more volatility this week and it brings down global markets a touch, I think you're going to have some really good opportunities to get into European markets. That's personally where I'm looking to get into more than. Again, look at how plentiful this is. There's only 2 markets out of what? How many names do I have here? Almost about 40 names of different countries or different regions. There's 2 out of the 40 that are down year to date. So that should also tell you something. Versus going into the U.S. sectors, we've got 6 sectors that are in double digits, and a decent amount that are down on the year. What do we have? 10. So only about 25 different names here or sectors, and we've got about 10 that are below, that are down on the year. So really kind of puts things in perspective, and I hope that this gives you some overall view of what's going on globally, because they spend literally, well, I like Fast Money on CNBC, and I think it's entertaining and it's a good show, and sometimes they bring out good points. They spend, a couple of them focus on international markets, and they'll talk about it. I think Tim Seymour talks a little bit about it, but they're not focused on it. You never, there's a couple of them, and I don't want to talk bad about any of them, but they have no clue. They don't even look at any of this going on. They'll talk about Trump, Trump, Trump every day, because that's what I guess that's what they know. So anyway, that is, I think, eye-opening in terms of what is going on globally and the trends that are going on. Any questions? That's pretty much it for tonight. We could go over some more charts for the day. How we function. Yeah, Thinkorswim took away Russell futures again, as well as dollar futures. They're passing those on to the customer. So if you're not a member of Tribeca Trade Group, we'll talk about that a little bit. Yeah, K-Web is one that I've been all over as well. I'm sorry, I don't have that one. I thought I saved that on here, but I'm very sorry for not including that one, because members know that I've been talking about that one left and right. Again, I thought I added this. I must not have saved my sheet, but really, really big performance for Chinese internets. So again, sorry to not mention that one. These have been absolutely on fire. I want to go to the performance year to date. Yeah, 40% year to date. So big screw up, to not have this in the presentation, but unbelievable performance from, something that I've just been kind of pounding the table on. Are they extended? Absolutely. BABA reports tomorrow. I didn't put on a trade for BABA, even though it was down today. I think this group needs to come in a little bit at this point. If you've been in some of these names, congratulations to you. But I'm not going to get involved in really too many of them at this point. It was also over an 80 RSI. Notice that it only came down, these things were up huge yesterday. So it was down 2.4% today. Look at what it did yesterday. Again, maybe wait, keep this one on your eye, focus, because, it started with BABA and it started with JD.com, which we've been both playing these names. JD.com is still way overbought. I wouldn't be surprised if BABA sells off in the morning, and it would probably end up being a good opportunity, a good buying opportunity. But other names like Momo, WUBA, nice cross of the 200-day moving average. WB, which had earnings, which exploded higher. Sina. I know a lot of people are focused on Baidu, thinking that's going to pop out. These things were unbelievable yesterday, and they took all of them with them. Baidu keeps trying. Looked like it kind of poked its head out yesterday, back in today, but I don't think Baidu's done yet. Again, you could draw a nice big old triangle pattern here, and it looks like it's trying to break out. So I think this one looks interesting. So I actually started a position in this one just the other day. And again, I've been doing a lot of starting positions because it's difficult into this market. You don't want to go 2 feet into this market, especially when things are overbought. So I like to start a position. And for instance, Baidu, if we get a little bit more volatility, then I'll add positions. I've been doing the same thing with a number of positions, which has really been helping me a lot in my trading. All right, so we've made a lot of changes at Tribeca Trade Group over the last year. I've got the best platform I think possible, which is Slack. Really gives all the traders, I think, an edge where we can all kind of communicate together and collaborate together. Put charts, Members can put charts in here. We could discuss different things. So we do a live room as well, but this chat room stays open at all hours. So if there is some volatility, we could talk about it at night, which I think we did a little bit last night. We're talking about the fear and gauge index today. How it really surprising that I looked at it this morning. It's funny this because last week this was in uh, it had slipped to 50 about a week ago, and then it had cranked up to like all the way up to here just yesterday. Because I looked at it yesterday and I was like, oh my God, is it really a 60 again? But I'm surprised this is still a 45. So kind of puts things in perspective. There's still not that much fear in the market despite today's meltdown. So what else? So here's what we offer at Tribeca Trade Group. Pretty much everything that you could ask for. We've got the live group chat where you could collaborate with other traders. I want people to post as many trades as possible. I like to discuss, just like a trading desk. When I used to work on an institutional trading desk, it's a free flow of ideas, and that's what I try to. That's really what I try to encourage at our training group. So you get live market commentary every day. I shoot a video at the end of the day. You get the newsletter that I send out every day that kind of gives you, amongst other things, that fund flow report that I talked about every day. Every week I put this together. So I've been not a stranger, to talking about international markets because basically that's where the money has been going, and that's what I've been talking about for the last couple months. We also have a cash trading. If you don't trade options, every day we trade options, but I also have a cash portfolio, which is a systematic trend portfolio where every trade I get into, I have my stop. That portfolio, I will share it with you. It's not a big deal. It's down today. I started this a month ago. I started this back on 315. So of course everything is down today. So I don't mind sharing with you, but this is, I have it programmed so that as long I don't have to do anything until this flashes no. So of course I'm down a little bit today. It was positive yesterday, but again I just started this. This is something that I was doing before, but I wasn't sharing with Tribeca Trade Group members. But basically, every time I send out a trade alert, I will have the stop price. So I've caught some nice winners in here. We've caught lumber liquidators, which basically I got into on the break of the 100-day moving average. I got stopped out after earnings, so I basically caught it right here. I've been in lumber liquidators. I have no idea why lumber liquidators keeps going up, but it does. I got stopped out here, and I got right back into it. So I've made money on both sides. I got stopped here, back into it, and since then it's been a nice trade. IBN, which is, I try to get into India through US ADRs. That's been a nice trade as well. And then a couple other trades that we're in is EEM that have done well, and you can see for yourself. So if you like to trade cash, trade stock, and have a systematic approach, that's what this is about. Many of these trades have done pretty well. I'm in IBN. I'm in Indonesia. You can see I've got a pretty good international stance. I'm in EM. I'm in EZU. Win took a little bit of a hit today. HTP, which has been up nicely. This name looks like it's going to get stopped out of RFP. This one, so I'm using basically, I've got this all programmed based on moving averages, and the one that's highlighted is the one that's a stop price. So every time I get into a trade, I've got my systematic approach of where I get stopped at, no questions asked. Sometimes it stinks when you get into a position and you get stopped out at it, but I have more confidence in my trading system than these individual names. Trading is about, you're going to have whipsaw moves, and it's usually in trend trading, 3 or 4 positions are going to make the majority of your profits for you. So some of these things I think are in there. Yeah, SSYS took a hit today. I got into that name just yesterday on the dip yesterday. So it did take a hit, you know, but I've been watching that since the break. It is a little bit extended, so it's a little bit risky. I think my stop in this one is the 20 period moving average, not the 50, which is a little bit higher. And I'm using an ATR stop. So I've got so this way I don't get a lot of people think that there's people sitting at 50-day moving averages to take people out, or excuse me, at moving averages. So I usually set an ATR stop below the 50-day moving average or whatever moving averages that I'm using, and I think you see that in the spreadsheet. But again, this is where I wanted to kind of take Tribeca Trade Group and have this based on cash and option trading, and I think that's the way of the future. Having a systematic trading program is what is I think what's really working right now in this market. All right. So any questions? So I hope you guys sign up if you guys are new. Give us a look for the month. Coupon code TTG for half off the first month. I don't think you'll be disappointed. I think in terms of other trading rooms, I used to be a part of another trading room, and I think what we've got blows away anybody else on the street. If you like to kind of collaborate and like a team environment and like as many resources as possible, then this is for you. Oops, I think I may have just turned off my mic. If you want to hear, some guy jump up and down about his trading and trading on emotions, then that's not us. So thanks everybody for joining for tonight. Again, here's the link where you can get involved, and I hope you check us out. I really do. I think what we've got, what we've built over the last year, is a tremendous group. We've got some really experienced traders that also do a lot of helping. A lot of the things that we talk about are quite advanced, but we break things down as well. And cool. Well, thanks to everybody for joining tonight. I know a lot of members are in here as well. So thanks for joining, and have a great night. We went pretty long. We went about an hour and a half. So thanks for your patience tonight. Have a great night, everybody. See you in the trading room tomorrow.